Good afternoon. Today is the 6th of May. It's the bank holiday weekend. It must be because we've got a plant in the back that my lady wife picked up earlier on. So a bit of a bonus video today. I'm going to be answering a viewer question for the first time ever, because Neil Thomas, one of my regular viewers, has asked me to look into hire purchase, PCPs, leasing and cash purchases. Which one of those should you choose to finance your next car? Well, let's get started on that, shall we? The simplest form of financing a car is literally just to bring the cash to a dealership or a private individual and drive the car away. Now, one of the advantages of this is that it's pretty easy. You can sometimes get a very good deal for cash, although I found recently with franchise dealers with second-hand cars, they don't like to negotiate cash very much, which is a right pain. Also, bear in mind that most franchise dealers won't even take cash, physical readies, as a payment. They would much prefer you to do a bank transfer or use a credit or debit card. They can't handle, some of them, any cash whatsoever on the premises. So you can't negotiate for cash at all. That's not really possible. So it's pretty simple. You just hand your cash over or do a bank transfer or use a credit or debit card machine and you finance your car. Now that's easy, straightforward. Problem is that if you were, for example, to buy a brand new car with cash, you just pretty much lose it the moment you disappear off the forecourt. The depreciation is very bad. I mean, in some cars, it's more than 50% in the first year, which, is pretty annoying. So I think there are other options as well. But for second-hand cars, for example, I'm doing a job next week where looking at a car that's about 3 years old and it's lost a good deal of its value since it was new, probably well over half. And, it's a straightforward cash purchase and there's nothing wrong with that at all. But not everybody's got thousands of pounds to spend on a nice, nearly new car. So what happens if you want a brand new car or you just simply haven't got, the money to finance a nice second-hand one? What happens if you've got, say, £1,000 and that's it? What are your options after that? The first option, and the most straightforward one to explain, is what we personally have this car on, which is my lady wife's MG3. We've got this on a hire purchase agreement with what's now called Vauxhall Finance, but used to be called GMAC, General Motors Auto Credit. Now, it is an MG, but obviously the finance company they use is Vauxhall Finance. Now, that's very confusing, but it doesn't really matter. There's an interest rate of about 2.9% on this, which for a second-hand car is amazingly good, actually. And I bought the car in November 2016. I put a part exchange down, which was an old Rover 216 I had, and I got a few £100 for that. And we're paying about £106 a month on this particular car. And the agreement was for 5 years, so we've had it about 2.5, so we're just over halfway through the finance agreement now on this car. We could pay that off early if you want to, but £106 a month is not a lot of money, and it's very straightforward. We just pay that amount of money all the way through over the course of 5 years, and once we've finished that, whether we pay it off early and you get a discount on the interest rate if you do that, or stay till the end, that's up to us. It's very, very straightforward, and you can get some really good deals on hire purchase. Sometimes you can buy a brand new car on 0% finance and hire purchase, which is brilliant. MG are doing a couple of those offers right now, and other manufacturers obviously do them too. I don't work for MG, I just happen to have one. So that's one of the things you can look at, which would be straight HP or hire purchase. Of course, one of the disadvantages of hire purchase is you need to borrow all the money to pay off the car, and that can result in a monthly cost of the car being higher than it otherwise would be with some other options. And the car cost about £5,200 or so to buy in November 2016. It was around 2.5 years old when we got it, which is which is pretty bad depreciation, isn't it? It's about half of what it cost originally. But that's good. It means, a second-hand buyer, not borrowing that much. But the next one, and that's why we're in another car now, this is the Seat we're now in, is a PCP. And this is something a little bit like a hire purchase, a little bit like a lease. It's like a cross between the two. And rather than saying, you've got a term, in this case, the PCP is 3 years rather than the MG, which is 5 years. I don't borrow all the money to purchase this car up front. Let me explain that a bit better. Just pause for a second. So with a hire purchase, as I said, I put down a deposit. In this case, it was my part exchange Land Rover, and the rest of the money I had to come up with, I borrowed over the course of 5 years at a set rate, plus interest, and that's my monthly purchase price, monthly payments. They're steady all the way through. On a PCP, it's a bit different. I didn't borrow all the money for this car up front. What actually happened is that I got a discounted price on this car because I took the finance, and the finance rate on this car is not great. It's about 6% or something. It's not as good as VMG for some reason. But for taking the finance, and the finance is provided by Barclays in this particular case, I got a discount on the price of the car, and I got a further discount because it was a special offer. So the list price of the car was 20.5. I paid 12.5 for it, which is pretty good. And my monthly payments are about 155 a month. I also put down a deposit of £3,000. Now that doesn't really make sense, because if I'm borrowing £12,500 over 3 years, and I put a £3,000 deposit in, so I'm borrowing nine and a half effectively. That still doesn't equate to 155 a month. So what I'm actually borrowing is not the whole amount. I'm not borrowing all the £9,500. I'm actually borrowing £9,500 minus what the car is estimated to be worth at the end of 3 years. Now that's called a balloon payment. It's called the final payment. It's called a minimum guaranteed future value. It's called all sorts of different things. I mean, I'll just call it the balloon payment, that's the term I tend to use with these things. But you and the dealer effectively agree what your car is going to be worth after the end of the finance agreement. In this case, it's 3 years, or to be technical, it's 37 months in this case. And in this car, it's somewhere between £6,500 and £7,000. I can't remember exactly. So I'm only borrowing really the difference between 9.5 and sort of 6.5. So I'm borrowing about £3,000 effectively, which isn't actually, it's not that much, and that's why my monthly payments are much lower than if I just borrow £9,500 straight away. If you can get your head around that, and I can understand if you perhaps can't, you'll see that my monthly payments are much lower. But if I want to keep the car at the end of 3 years, I basically have 3 choices. One is I come up with the extra balloon payment, and that is about between £6,500 and £7,000. Well, it's 6.5 for sake of argument, because I can't remember exactly what it is now. I can come up with that in cash if I want, and I keep the car. That car is then mine. I can also trade the car in for another Seat or something else, and I can pay, nothing at all extra. If as long as the car is in a reasonable condition, that's dictated to in terms of conditions. I can just trade this car in for another one. It might be worth a little bit more if I keep it in nice condition and I keep the mileage low, which I have done. Or you have this minimum guaranteed future value, the balloon payment. So they guarantee that if you've kept the car in the condition that it's supposed to be in and the mileage hasn't been exceeded, then you'll get that amount for it as like a trade-in against something else. So you might have a little bit more because you kept it in nice condition, and then you can put that towards a new car. That's what the dealers hope you're going to do. I don't know if I will do that or not, but that's an option open to me. There are 2 more options actually, rather than just one. One of them is that you can just hand the keys back to your car. Effectively, you've rented the car for 3 years and just walk away. That's what you can do. That's not a problem. The other thing is, like the MG finance VHP, you can just pay it off early if you want. You can pay the finance off, but you'd have to pay it all off at one go. You'd have to pay whatever was remaining on there, and you would get a bit of a discount on that, but that's not really what most people on PCPs tend to do, because they probably aren't planning on going all the way through and beyond. So the final option you can do is what's called a lease, or a personal contract hire, PCH. A lease is effectively just renting the car for a period of however long you want. Now, what I forgot to say about a PCP is there is an agreed mileage limit at the end. My mileage limit is 14,000 miles a year, although I've only done 20,000 miles in the car in just under 2 years. So I've actually got... if my maths is correct, I've got 34,000 miles in my agreement, but I'm so sort of far under that, but I don't think I'm ever going to get anywhere kind of near that. So hopefully I'll get a little bit back for being under the limit. The other thing you can do with the lease is you just forget about things like the minimum guaranteed future value of balloon payment. Just forget about that. You do have to have a mileage limit, and but these and leases tend to be quite strict. But literally just renting the car, you don't have to worry about the value of the car at all, or what you're paying for it. That's irrelevant. That's entirely irrelevant. You just literally worried about the monthly cost of it. Now, this is very good for peace of mind, because as long as you are good at looking after your car, because you don't have the option of buying the car outright in any way, trading the car in at the end, buying it outright at the end, paying the finance off early, you can't do any of that. It's literally the leasing company owns the car. You're just renting it off them. And so they can offer very competitive rates, because as long as the car comes back in the same condition as you agree to do it, then they can offer some really, really good deals, because there's no messing around with anything else. The other thing that people like doing on leases is to include their maintenance in there as well. Sometimes tyres, batteries, servicing. You can all put that towards a monthly leasing cost, and it does obviously put it up a bit. But that for ultimate peace of mind about really not having to do anything other than put some insurance on it and fuel it, then leasing can work really, really well. Obviously, the disadvantage of both a PCP and a lease is the fact that you've got to keep the car in really nice condition. You've got to make sure that if you've got scratches and things like that on it, and you've gone over the mileage limit, that you keep it like that. Otherwise, you pay penalties for exceeding the mileage and damaging the car. The other thing you have to do on certain PCPs and leases is go to the franchise dealer for your servicing. Now, on this particular agreement with Barclays and the Seat, I didn't have to do that. I've been to 2 independent garages so far to service the car. It's a pretty simple car, actually, compared with a lot of other ones. And so I was not limited by that. But my mother, who has a PCP on her car, she's had to go to Mercedes' main dealer, and it's £400 per service, which is frankly outrageous. But you have to think about these things quite carefully before you get into a finance agreement. In conclusion, I wouldn't say particularly that any type of finance is better or worse than anything else. They've all got their pros and cons, and sometimes going for straight HP on a 0% finance deal over 5 years, particularly if you've got a 5 or 7 year warranty, is brilliant. No worries about mileage limits, no worries about what the car's going to be worth or something too much. Although your PCP and leasing, they can reduce the costs down quite considerably. And PCP is a good option if you don't know what you're going to do. Because if you lease the car, then your car gets taken away from you after a period of time. So it can work out really well. In this instance, but both the options we've chosen here, the HP on the MG and the PCP on the Seat, they've worked really well for us. But what works for you will depend entirely on your personal circumstances. So I hope you found that video useful. Sorry it's been quite a long one. It is quite a complicated issue. Please don't forget to subscribe if you haven't already done so, and click the bell icon to be notified of new videos. Don't forget to leave a comment below and to like this video if you wish to do so. My website is www.lloydvehicleconsulting.co.uk. Please use the Contact Me page on my website to get in touch directly if you'd like to do that, like me to source a car for you in any one of these finance methods that I've explained. That would be wonderful. I'd love to do that. My Facebook page is facebook.com/Lloyd Vehicle Consulting. Thank you ever so much indeed for watching.